Trading failures keep hitting you repeatedly, especially at times like these where the market volatility is just so high. The market fundamentals need to be very strong for it to sustain such volatilities. While all of these events constantly keep haunting an investor, it becomes extremely important to ensure that you as an investor are always at peace. Welcome back everyone. Today's video is perhaps one of those that will tell you about a few of the most important characteristics that a healthy investor must have. Perhaps it is about one of those important elements, and it is how to mentally overcome trading failures and losses. Hit the like button, subscribe to this channel, and let us know your views in the comment section. Let us get started. A person may go through unprecedented levels of depression, self-doubt about the kinds of decisions they make, mental agony, and a lot more as they lose a fair amount of money in the stock market or cryptocurrencies. Well, it is a fact that people do constantly keep losing their money very often, and as much as it is normal for them to do, it is twice as stressful as that. As soon as you realize that you have lost this much in the recent past, the chances are that you will also have to go through a few questions which will not really have a lot of answers. The first one is, how do you recover your money back? Well, more importantly, is it even possible for you to recover your money back? As soon as you start looking at things, you will start feeling that the stock market is no shorter than gambling itself. Though, technically, this statement is not that correct. The chances are that you will continuously feel like having this thought in your mind. You will also feel worthless and too unlucky for having gone through all that you did recently. But keep things as optimistic as possible because things may not be as bad as you think they may be. There is always a scope to make things better, and that is what we are here to help you with. We would not want to tell you anything more before assuring you that this is something that happens to the best of the investors, irrespective of how well established an investor already is before he reached that point in his life. There was certainly a time when they had incurred some losses at some time or the other. People often go through these cycles, and the ardent followers of this just don't give up. They find out the mistakes they committed and try to work around them the next time. We would like to ask you to do the same. However, we understand that going through such a loss is not easy to get over. So, take your time and understand that this is a very normal flow of things. Trust in yourself and do not let this loss eat you up from the inside. These losses are not one-time affairs. The chances are that you will go through them more than once throughout your investment tenure. However, as it is for any other kind of issue, the one that hits you for the first time sounds too serious to you, and this is something we understand. People even reconsider their profession and think of quitting this altogether to get into some other field that will make things more consistent for them. Now, for those who make a desperate trading practice, it will be something that will certainly make things even worse for you. Invest in yourself and keep yourself calm. Conduct good research before making any form of investment because a mistake like that could cost a lot more than a genuine mistake. You should make sure you empty your account once you have suffered a big loss and take all that is left to your main bank account. Keep your trading wallet empty. This is extremely important because otherwise you will notice that you have this tendency to make up for these losses in a pretty aggressive manner. Remember that over 70% of the time, the root cause of you making a loss is your inability to control your emotions. As you turn emotional and let it affect the way you work, the chances of you making mistakes increase by a huge margin. Keep in mind that you need to have a very good understanding of your current status. Emptying your account is very important for you to make sure you do not take the wrong step. The next step required comes after what we mentioned here in sequence. Take a break. Yes, you need to take a break. This break is important for you to ensure that you never make the same mistake too soon in succession. Because if you do that, the result could be worse than what you are going through right now. So always make it a habit to take a break and ensure that you stay away from the market. Do not track the trends in it for a while. Don't discuss stocks or the investment you have been making with anyone. Just stay calm for a while and embrace what happened in the past few weeks. This is important as you need to make sure you are aware of what has happened, and you need to embrace it before making a move again and investing in a way that will, in one way or another, bring forth your desperation to bring back the money you lost. You will never get the same money back to your account. But what can happen by keeping a cool head is that you can make up for those losses that you incurred, and you can ensure that you learn from what happened to you back then. Learning is a very important step which can be accomplished through this duration as you take some rest. This is also the phase where we advise you to just accept that you have lost some part of your wealth. And it is totally fine. As we mentioned earlier, it happens to the best of them, and you are no exception. It's just how you are supposed to learn investing. You work on the mistakes you committed, and you proceed with all you learn to make a better investment the next time. The time we mentioned earlier as the break will be for you to learn and understand what you did wrong. You need to have a good understanding of the issue that persisted while you made a loss. This leads us to the next important thing that you need to do. Investigate the root cause of things. This is an important step and forms a part of the learning process. Research about the wrong step you took and understand the mistake so you don't repeat it ever again. Investing is something that, despite the fact how many classes or courses you attend, you are bound to make mistakes once you get started in real life. Many times, one may lose money owing to the system failure. By this, we mean the losses you make as an effect of your broker platform not working the way it should. In such cases, you need to ensure that you let this issue be known to your broker service providers, as it may help them fix the issue better and work some things out that could ensure this never repeats. This is where you need to ensure that you choose a good broker agency. Always ensure that you follow a system. Make one for yourself. Even though it may work, this will protect you from making an investment based only on your gut feelings. This step will help control the gut feeling and make it important for you to control each step you take from the start. So, the next time you start, you need to get started with lower aims. Do not look at the higher margins right from the start, as this could trigger your desperate minds back as a result of having suffered a loss in the recent past. Never do anything that could trigger that element within you. Do not consider the losses that you incur as the end of the world. Invest smaller the next time and build up your confidence again with time. If there is someone helping you out with your investments, or if you have a pact with someone, let them know of your reduced pace. If you were to start again with a lower capital, a good amount of money would be 30% of the total capital you initially thought of. Keep an aim of having a 50% success ratio and a profit factor greater than 1. This will help you cross all hurdles that you have been inflicted on in your past. As soon as you understand that investing slowly is the key to recovery, you will realize that it is extremely important to ensure that this duration is strictly followed, not only to recover financially, but also to help your mental state come back to normalcy. Once you have incurred a loss, it means that you need to start taking investment as a serious business. There are chances that you may have been doing it for entertainment in the past. But after having suffered a serious loss, if you intend to get some money back, you need to take it seriously. So this means that you will need to be aggressive about it. But mind you, the word we used was aggressive and not impatient. Always ensure that you maintain peace of mind, have strong intentions, and stick to them while working the day and night. Take slow steps, but well-researched ones that will help you travel a long way. As you start again, the journey is totally new, and this time, you have the chance to start up all again and to appreciate yourself with the progress you make and the risks you manage. So, never look back from that point in time. The profession you have chosen or the kind of fun you have chosen comes with this intricate nature of always exposing you to losing a portion of what you invested. A loss while trading can be devastating, and we understand that better than anyone. The truth is that the manner in which you react to the losses is more important than the loss you have faced. You will see that your next steps after incurring a loss are what determine the effect the loss in itself has on you. So always make sure you react in the best possible ways and bring in an effect that could change the manner in which you think over a period of time. There are a lot of issues involved when it comes to trading while incurring losses. The reason for this is that the person then not only has to incur the financial losses, but will also have to go through a lot of mental stress and the feeling of worthlessness. You then attempt to make up these losses as revenge, resulting in you taking extraordinary actions and losing out on the more important parts of the entire journey to a good investment. Your reactions must not be destructive in nature. A revenge ideology is one of that falls under the destructive ones and could affect your investment portfolio really bad. Learn how to handle your trades and make sure you invest in the best possible manner. Always make sure you have a good understanding of all actions you take. A lack of discipline is what forms the root of all causes. You may lose a huge amount of money in a single go. However, letting that affect you morally is not something that a healthy investor must conduct. So, the number one that you may have to do is not let your emotions ride over you. Always be bold enough to not and let things pass by. Do not let go of your trades too quickly. FOMO, or in other words, fear of missing out, is something that is very common among investors. This makes them take reckless decisions without completing their research or while they are just halfway through their research. This is not at all a practice that an ambitious and disciplined investor must continue for a long time. This may affect the kind of interaction you keep with your investments and also the kind of work you get done through these investments you make. Always remember that you are essentially letting your money do the work for you. In other words, you need to deploy them at the right place at the right time to ensure you reap all of the benefits from it. So, always ensure that you pile up as much information as possible to employ them while making an investment. If you are one of those who has recently faced a downfall, ensure that you stick to a few disciplines that may help you increase your growth over a short period of time. One of the major reasons why people often miss out on their investments is the fact that there is a lot of information out there. So, people often get misguided or confused. Once you have made a loss, the only person you should trust is you. So make sure you think of the options you have and continue making a good strategy that could take you out of the mental and financial constraints you have had in the past. Keep a limit on yourself and get into a limited number of trades that you can afford to handle. When we say handle, you need to take into consideration a lot of aspects. Constant updates about the progress the company has made, the recent updates in meetings, directors, and the entire board, and all updates regarding every other factor must be within the ambit of your knowledge. Making a mistake here is what often leads to an investing mistake. So never let this happen to you. Always invest in companies that you understand. Their work style and product must be something that you relate to, and their business model must clearly be understood by you. Now, before we come to an end, allow us to mention a few characteristics of a successful trader. A successful trader is not the one who will not have any losses on his name. Perhaps he will be the one who will be able to handle these losses and make a good comeback from them. In other words, he uses the same opportunities for him to learn and ensure those same mistakes do not occur again. So, the way you react becomes a very crucial aspect in determining the kind of success you make out of all these issues. Even though handling such losses is a task in itself, you must know how to keep yourself over this entire loss and stay healthy. Never let a bad day cost you more than what it has already cost you in terms of the loss you have made. What we mean is that it may be possible for you to have made a loss. However, if you do not handle it well and end up making more mistakes, you will probably end up making twice as many mistakes and hence twice as much as the loss that you previously made. You need to control your losses to be able to make good progress throughout your investment life. This is a rule that will consistently apply before you make a significant loss and after it as well. So, that is all for today. Make sure you hit the like button and subscribe to this channel to keep learning. We will meet you again with another video. Until then, help yourself by turning on the post notifications.